I'm just going to bring it back to ratio trading super quickly because I just wanted to give kind of my general advice when asked about ratio trading. And, generally how ratio trading works is you have two coins that you want to accumulate long term over time. And so when one of them gains in value relative to the other, you do the opposite of what's happening, the opposite of what the market is doing, right? So like you trade coin A is going up relative to coin B, so you flip coin A into coin B. And then when the circumstances reverses and coin B is going up relative to coin A, you flip your coin B into coin A, getting more than you had originally, right? And so ratio trading kind of it's two trades. You need two trades basically to be able to make it work in order to realize profits. And with Pulse Chain, I think it's important to remember that framing in that whatever is happening in the market, you're doing the opposite to take advantage of the swing on the other side. And so we talk a lot about how you can get wrecked doing this, and that's very true. But of course, the opposite side of that is that if somebody's getting wrecked, then somebody else is making immense profit. And so depending on where you are on the risk spectrum with that percentage of your portfolio, that's something that you have to take on personally. But the one thing that's different with Pulse Chain pre-bridge versus normal ratio trading coins against each other is that you may not have access to the coins that you need to be able to properly execute what the market is giving you, right? So like if you're trading Pulse Chain versus Pulse X and you didn't get into the Pulse Chain sacrifice and Pulse Chain is running relative to Pulse X, well, you don't really have the coins to be able to take advantage of that. And I think that's probably the bigger recipe to get wrecked is when you don't have the thing that you want, and that thing that you want is the thing you need to be able to execute a ratio trade on, right? So when you're looking for those who are interested in ratio trading at all, like be very cognizant of the coins that you're going to have leading into it, because that is going to dictate directly what opportunities you're going to be able to take advantage of. And if you don't have the coins to take advantage of it, like I would really strongly encourage you to just sit back and watch.
Yeah, we talked about this last week, and the question was, well, what do I have to trade on day one if I wanted to do that? And the answer is one, nobody can answer that for you. Two is, do you want to be in a crowded trade or in an uncrowded trade? And what do I mean by that? Do you want to be where everyone is and trying to trade out of the same thing into the other thing, right? Maybe you have, let's just use Hex as an example, right? Because it's a great example because a lot of people say hold Hex for the fork, right? Well, what happens when you do that? All these people buy Hex, awesome, price go up. They have it for the fork on Pulse Chain, they immediately dump Hex to get Pulse. Well, Hex doesn't have a whole lot of liquidity and it has even less liquidity between Hex and Ethereum, right? The vast majority of the liquidity is with USDC. So now you have a tiny pool and you have everyone try to trade through that pool to get the Pulse. Well, what happens to the price of Hex on Pulse Chain? It goes down. That creates a buying opportunity for people who do want to accumulate Hex on Pulse Chain. But in the meantime, you're getting less and less value out of that because you're going through a very crowded trade in a very thin, small liquidity pool. What if you had something else that has an incredibly large amount of liquidity on Uniswap and SushiSwap and the larger exchanges today that will be forked on the Pulse chain that are paired with Ethereum already, that the AMM fixer bot is going to buy up and redeploy all or some of in Pulsex. Those could potentially be opportunities where you selling your tokens might not have as much of an impact on the price, right? Now, again, there is no easy answer to this because no one has the ball and no one can tell you how things will play out, okay? So again, this is at your own risk. Without knowing the prices involved, you have no idea whether or not you made a great choice or a bad choice until we finally have price discovery. And then you can either celebrate or cry in your beer, right? So, if you want to go there, just be fully aware of the risks and only play with what you're willing to lose, right?
With that being said, that was excellent. Can you guys talk about how pricing is assigned there? How does price discovery work post bridge? I thought that was interesting how Katie said that the pre-bridge trading doesn't have any effect on price. If you could talk about that, that'd be helpful. Thank you.
Price discovery will happen kind of like if you were to deploy an ERC20 token right now. So like say you were a founder of a project and you pre-token allocated yourself some of the supply and you went out into a V2, you put up the first initial liquidity pool to dictate the starting price for your own token. So say you put up 1,000 USDC to 1,000 of your token, you're dictating that your starting price for your token is going to be $1. And it doesn't happen until the first person actually makes a trade out of that pair. So price discovery happens through traders, but it also happens by the people that are putting up the liquidity pools. So price discovery on Pulsechain is actually going to be extremely interesting, and I'm definitely going to sit back myself to watch it, because essentially there is the possibility that multiple pools will be made between multiple tokens. And this is a V2 that we're talking about, not a V3. So you need to compare it to the V2 type of scenario. Some people actually bridge over tokens of value from Ethereum and pair them with their forked over copies. Those pools are where the price discovery is going to happen. So Fix the Bot, for instance, say it wasn't a smart contract that was Pulsex owned. It was deployed from a personal address, and now you have a benevolent wallet that's choosing pools. The ratios to which they're traded, there could be multiple pools, plus taking into consideration that our community members could bridge over assets and make their own pools as well. Wherever the first trades are made is where the prices will be dictated. So that's where your initial price discovery happens, and then you move into volatility. So for instance, when the forked over copies get bought up by the Fixer bot, they're ETH to ERC20 pairs. They aren't like USDC to ERC20 pairs. So some tokens will have extremely thin liquidity. So you're talking about price volatility. So Hex, for instance, is majority paired to USDC and USDT and DAI and stable coins. So there is a high chance that Hex's liquidity at the start will be thin. So there's multiple aspects to take into consideration, but price discovery happens through the first trade through a ratio. Where it will end up is extremely speculative, especially depending on what ERC20s, or in this case PRC20s, you're looking at and how thick and thin those pools are. So for instance, the notion that went around the community that Hex might be the best asset to hold to trade in the very first few days for Pulse might not necessarily be the right play, especially if you're talking about a large majority of people having the same mentality to do the same thing. And then taking into consideration that what if those pools are thin at the very start and we don't know that until that point in time. Now you're talking about high volatility in an asset without being able to determine where price discovery is going to happen either. So price discovery could happen at 20 cents and then skyrocket down, which would make a volatile asset not as bad, so to speak. But true price discovery, nobody can speculate it, because again, that happens through traders and ratios. And when V2 and the bridge are finally open, those ratios, again, there can be multiple pools to the same asset. So wherever that first trade is made is how price discovery is going to happen. Yeah.
I assume, I mean, just my opinion, that's really worth nothing, but just, I'll share it anyway. My opinion is it'll be Ethereum or USDC bridged over, right, onto Pulsechain. So now you have something with a known value coming onto Pulsechain, and then that being paired with something else on Pulsex for liquidity. Now, by definition of giving one thing value, you can derive the value of pretty much everything else. So it becomes this just cascading effect, because if you know the value of Pulse, or if you know the value of the Pulse version of USDC, then between all the other liquidity pairings on the chain, you now can define values of everything else. So all it takes is one. And the question is, who does that first bridging event? Who does that first LP pairing event and defines that ratio? That's the $1 million question.
But that was a great question.
If you guys have any kind of information that could be possibly available, as far as if there's any plans for a type of, I don't want to say like pensions, but I'm just looking at like what Coast is doing with onboard, offboard, fiat. They're getting some international players, as far as involving with this DeFi, specifically the Pulse chain, and if there's any possibility in the future of some type of a like a pension fund that can be established, seeing as how it's going. Looks like Lehman Brothers 2.0 is about to unfold as far as pensions go. So I'm just thinking kind of forward here and seeing how things are kind of operating together, and maybe if this is even something that's being even considered, or maybe not.
So the Coast Guys are building a fiat on and off ramp that's only like available in certain jurisdictions with the countries that they've secured partners and done the correct paperwork for. That fiat on and off ramp is actually pretty awesome. It's kind of like true USD where it's always backed by a dollar. So I really like what the Coast Guys are doing. When you're talking about a pension fund, though, that's opening up true centralization, because that's just a third party that's going to essentially invest in assets for you for your future versus you taking your own investment and investing it yourself. So that opens up obviously centralization and aspects that you need to be comfortable with too if you were to look at that. So like something for crypto that I'm pretty sure it was funding Jim was speaking about that possibly again could be something good, but it is centralized, would be like an insurance policy for people that do invest in crypto and they get rugged. So that's like, there's many aspects that DeFi can go to in the near future, but who's going to build it and what are the risks involved is a different question.
Well, I think one of the underlying themes within crypto is self-custody and be your own bank, control your own money, control your own financial destiny in a sense, right? To go hand in hand with that, and not to go too far down the rabbit hole, because it's definitely a discussion for another day, is if you wanted to expose your retirement savings in protected tax-deferred accounts to crypto, there are ways to go about doing that here in the USA. I can't speak for other countries, only because I'm not personally familiar with the tax laws in other jurisdictions. But within the US, you can create what is called a self-directed IRA, individual retirement account. You can have it if you have your own business. You can create a self-directed solo 401k if you don't have any other employees. It's just you or you and your spouse. There are other ways to get around that as well. But when you create these self-directed accounts, you then have more options of what you can invest in beyond just the 10 funds that Fidelity wants to give you or your 401k provider might want to provide you, right? So by doing that, you then, one, take on the full responsibility of vetting your own investments and having to pick good, sound, long-term investments. So that's a huge responsibility. You need to manage your risk, right? But on the flip side is that for those self-directed accounts, you can then expose yourself to some crypto. Thereby, if you wanted to use a fiat on or off ramp, like what Coast is building or any other centralized exchange, I've used Gemini, I've used Kraken, some people use Coinbase, some people use KuCoin, etc. All these exchanges allow you to create an institutional account, right? Because you need a business style account, not a personal account, for these entities to be able to onboard and offboard fiat to crypto and vice versa, right? And you can then include an allocation of crypto in your retirement fund, your personal retirement fund. You are the one making the decisions. You were the one controlling it, and you were the one driving your allocation and the timing of things, not some pension fund manager. So definitely a discussion for another time, because I think these things open the doors for a lot of opportunities, but there are ways to do it here in the States.
So when people are talking about pension, and they're thinking in a legacy format, I think a commentator was saying something along those lines earlier. You basically just have to do, in my opinion, in the DeFi space, do risk management. And I think that their product is interesting as far as an insurance policy of sorts, and play those markets where you're basically hedging. You're hedging when you diversify in general from your employment giving you sustenance versus your investments. That's a hedge. You're saying my investments can perform when I may not be able to. Same thing with other things like insurance policies and so forth. I have a friend of mine that is very interested in this space and and what's happening in Pulsechain and Pulsex and all these other narratives. And he has about 40 years of experience buying and selling insurance companies, dealing with hedge funds and things like that himself. So like the legacy world, kind of products, when you say something like pension, and it's not a a familiar term for me in DeFi space. I would follow what Buck has to say. I think him and his team are, very savvy, and they have a lot of experience in legacy, as well as their development team seems to be very knowledgeable about what's potential on Pulse Chain as far as DeFi. Hedging and positions, shorts, and things like that. And that's just basically, becoming financially literate, listening to their content. So that's one point. The other thing is, I think the space a little bit. Either they've stepped down, but I'll try and DM them later. But Coxstein Media was in here for a little bit. I didn't hear what their content was, and I don't know that it was David or it was his partner as far as the media tag. But they were in here earlier, and I'll try to cajole them. I think my tweet is what got them to know that this room was here. David is, he's an interesting character. He's got 700,000 or 800,000 followers. He's making a lot of commentary. Sometimes it's Tate stuff, which I really don't care, or it's just basically politics in general. But he does make a lot of content about this meme coin and what's going on. He does get engagement from Elon and things like that himself, and he's trying to build his media outreach. I think that when they come in, that it is good to propose. They're trying to schedule like regular programs. And if it is something along the lines of whether it's branded as here's what Pulse Chain is, here's what their goals are, here's why the product founders are launching on Pulse Chain, that kind of stuff, they maybe they can do a program that is asking those questions and help field that information so that we can actually utilize it in these Twitter spaces to build a better product, more secure products and things like that, right? So they do come in the room. Sometimes it is because they've been tagged, and that's great. But realize why I put that social capital to use is I'm trying to bring these people into the room that have media platforms. And yes, it's going to grow their brand. Yes, it's going to get eyes on, whatever meme coin of the week or whatever's going on Solana or FTX drama or whatever, because they're hosting a lot of these Twitter spaces. But if I can get them to kind of focus on a program session, a Twitter space, or otherwise their podcasts or YouTube channels, it's useful because I don't think we need to be labeled as the toxic community when Pulse Chain comes out. I don't think that, combat and gladiatorial efforts are necessary. If we are effectively good developers and the code is sound and can be verified and audited, great. If the people that are building are, have voice and action that's congruent, that's even better. Like, we have an amazing community. And, again, if a BitBoy comes in, if Wendy ETHO comes in, I'm not simping for their audience. I am trying to get them to have a program that is talking about these technical things, these, liquidity pairings and, what the game theory may or may not work out on Pulse Chain, and actually, in some ways be a bug bounty program, of sorts, because they're going to win social capital or they're going to lose social capital by engaging us. And that's just kind of my politics of how I'm trying to engage other influencers.
Well, I do want to react to your first item there, and I just want to let everyone know, if you're talking about hedging through puts and calls and so on, I urge everybody to do your research, know what you're doing before you use those types of platforms, because it is not necessary. It is complex, and you can get yourself wrecked. So, you want to know what you're doing before you start doing any kind of futures and options trading, whether you start doing any leverage trading, et cetera, because these are powerful tools, okay? And it's good to know how to use powerful tools, but you need to respect them, right? So as long as you then know how to use them properly, you know where they fit in your toolbox, you know when to use them appropriately, then by all means go use them and benefit as much as possible out of it. But I just want to just stress to everybody, futures and options trading are not your 101 finance type topics. So just be careful with that.